Hello, this is Megan Horneman, the Chief Investment Officer for Verdance Capital Advisors. Coming to you today with our regular segment of Markets with Megan, and we want to talk about the inflation report that came out this morning, which measures the price increases for the consumer price index. So this is what consumers see when they go into the stores. Unfortunately, the the headline number came in a little bit higher than expected. Now, this was completely due to the increase we've seen in energy prices. The core level came in about as expected, but we're still seeing at the core level prices growing 4.1% on a year-over-year basis. So we're still well above what the Federal Reserve wants to see. When we dig in deeper to the report, the reason why the market's selling off a bit today and interest rates are moving higher is because some of those sticky inflation numbers that the Fed looks at, housing, we saw owner's equivalent rent jump 0.6% this month. When you look at the super core, which takes basically the service prices and excludes that shelter number, that was up at 0.6 as well, and that was the most we've seen in a year. So interest rates are higher on this. The Fed's not going to necessarily like this report. We still think there's another rate hike for the Fed before the end of this year, whether it's in November or December. The timing of it isn't necessarily the main concern. The main concern is that we do think there's another rate hike. Equities are still a little bit too stretched with this expectation. So you're seeing equities sell off a little bit today and interest rates move higher. We'll keep monitoring the data and be back to you again for our next segment of Markets with Megan. If you have any questions or comments, please feel free to reach out to podcast@verdance.com. Thank you.